Hey everyone, and welcome back to the Your Money Your Life podcast. We're on episode 306 of the pod. We're getting down to the end of 2025, which has been a great year. So make sure wherever you listen, you like, subscribe, 5-star rate and review. We got the TikTok going, we got Threads post going, we got YouTube Shorts going. I actually posted a YouTube short that had almost 40,000 views, and I didn't even know I just posted it. Didn't think it was my best one, but it was a little bit of humor, a little bit of fun, a little bit of information, but it did get views. So make sure you subscribe to our YouTube as well. We're going to keep posting long form videos and short form videos, and we might just switch up our content entirely in 2026. You never know. You may see just a whole switch up of how we do things, how we do the pod, how we do our short form, how we do our information in social media. But in the meantime, make sure you share and like, subscribe for everyone. Now let's jump into it. There's the news that we first always go to is talking about the market and what's been going down with the market this week. I hadn't even pulled up our chart, but I am doing that now. And then I'm going to share my screen so that the people that are watching can see the chart because the chart is going to tell us a lot. So let's get to it. I want to make sure I'm on the right place here. So now looking at the chart, again, we always look at S&P 500 ETF trust that just pretty much follows and mirrors that S&P 500. Over the past 5 days, we're about flat, a little bit higher, about a quarter of a percent, a little bit above a quarter of a percent at 0.31% higher in the last 5 days of trading. Past month, we had some doldrums in late November, but pulled back up. And now in the past month, we're up 1.5%. If we finish this month strong, we're going to see another double digit gain on the market. What are we looking at? 3 years in a row? We had it in 2023, 2024, and then we look at it in 2025 would be another year of potentially double digit gains, which, you know, I thought it would be a moderate growth and not double digit. I think it was my claim for the beginning of the year. We'll see. We'll go back and look at the tape. Um, but it seems like the market, if it's going to be positive, it's going to be positive by like double digits. That's just the way the new market is. It's like there's no 6, 7, 8% good year growth. It's like 15%, 13%, 22% year to date. And so that's what we're looking at. But what's driving these things is the main thing we are here to discuss on the market. We all saw the Federal Reserve's latest interest rate cut. It was decided they're going to cut rates again. So the Fed did say they're going to cut rates by that quarter point, quarter point that they're going to cut by. And again, that's just going to move that the market responded in kind. They moved higher at the Federal Reserve, said that they were going to cut rates. It gave a boost to the equity markets. Yesterday, the markets were down for most of the day, and the announcement came from the Fed, and the market moved. And so the Fed announced an interest rate cut for the third time this year, and ruled out, and this year and ruled out a rate hike. So they're saying we're not going to raise rates again. We may pause, but we're not raising them. The central bank's Federal Open Market Committee cut its key overnight borrowing rate by a quarter percentage point to 3.5 to 3.75% range and signaled a slower pace of rate cuts ahead. Did they signal a slower pace of rate cuts ahead? The Fed Chair Jerome Powell said that the central bank is well positioned to wait and see how the economy evolves and know that President Donald Trump's tariffs have been a driver of inflation. So yesterday again, there was optimism in the market. It was given to the market by this rate cut announcement, and so we saw the market have optimism. And they said, "Hey, we were not going to raise rates, but we may pause or we may, cut again in the future." I think there's potentially 2026. They said they might only have one potential rate cut on the horizon, but Jerome Powell, the current Fed chair, is, I believe, out of his position sometime next year, might be early next year, and they're pretty much saying that they're going to put in place of him a dovish, meaning a guy that wants to drive growth and cut rates, a dovish new Fed chair that will be all about cutting rates. That's more than likely who's going to take his place. And so that's going to be something to watch because if they're cutting rates, the market's going to respond in kind. Disney just struck a deal. We're going to talk about that. Actually, let's get into current news of the week. Disney strikes a deal with $1 billion deal with OpenAI. It's enabling more than 200 characters to feature in AI-generated Soro videos. Okay, so Disney did their investment in OpenAI and said that their characters can be used. We did get jobless claims. There was a jobless claims unexpectedly post a large gain. So initial jobless claims last week spiked, reversing an unexpected drip from the Thanksgiving holiday. The Labor Department reported filings for unemployment benefits totaled a seasonally adjusted 236,000 for the week, up from 40,000 from the previous week, upwardly revised level. So that's really clear indication that the job market is now tightening. Multiple states saw large spikes in claims following the holiday period, including California, Illinois, and New York. Oh wow, okay, so we have that. Let's see what other early news we have. A new study raises hopes for Lilly's next obesity drug. So Eli Lilly, one of the drug makers of these weight loss, obesity, diabetes drug, say they have a next generation obesity drug. Retatrutide is hopefully how you pronounce it. It's helping patients lose nearly 24% of their body weight on average in 68 weeks. The drug maker said this on Thursday, and that the late study also shows participants reporting up to 62.6% less in knee pain. However, 18% of those taking the highest dose of the drug ultimately stopped due to side effects of losing too much weight. And then they said it works differently than other weight loss treatments currently on the market and hopes it will become the next pillar of its obesity portfolio alongside Zepbound and its upcoming pill. Interesting. I don't know why I'm reading all this so much. I saw it as an article. I still do it the old fashioned way. Discipline is the old fashioned way for me to get in shape. Um, the original pill is just the discipline. And so I've recently got back on my thing, getting back in shape. That's what I do. But hey, no shout out to people that need it. They need to take it. It's all good. You have to um, do what you need to do, but be aware of those side effects. Be aware. So the Fed Powell says he sees an overstatement in U.S. job numbers. So the Fed voted on cutting rates, and there was a dissenting opinions on if they should cut, if they should raise, if they should stay paused. But they are saying that the job market, while they're cutting rates, that the job market is a concern for them. The government data has overstated recent hiring. This is Fed Chair Powell saying that. He told reporters that Fed researchers believe official numbers could be off by 60,000 jobs a month, which would swing monthly gains since April from reported minus 40,000 to minus 20,000. He thinks there's an overstatement in these numbers. Among factors potentially skewing the data, fewer timely survey responses, and Labor Department staffing shortages, and recent government shutdown. So he's thinking, Fed Chair Powell's like, we're not getting accurate data. We believe that the job market is a lot tighter than it's being stated. And hey, sorry guys, that's what he's saying. He's like, that's what it is. So that's kind of scary to know if we're not getting accurate data. How are people, investors, himself included as a Fed chair, making decisions with inaccurate data? And how can we fix this data? Do we need to hire more people at the Bureau of Labor Statistics? Do we need to get more people? Do we do a better job at the survey so they're timely in the responses? That's something to note. So we already talked about the jobless claims, which was again scary numbers there. Nothing much to say again. It's a tightening market, man. It's a tightening job market. And we'll have to keep our eyes on that, especially as we go into holiday season. You usually see a lot of seasonal hiring during this time, and I don't know if we're getting as much as we normally see. So that's something to keep your eyes on. Let's jump into the roundtable this week. Um, there's some fun stuff to talk about, right? Like I was talking to, so we're working on a potential program for creatives and artists on how they can approach as a creative, as an artist, if you're maybe not making as much until you start to pop off like those great artists of our generations, and you're living paycheck to paycheck and you're struggling. So how do you actually get started with saving in a world that's making it incredibly hard for things to be affordable? I say start with the basics, right? Because like people are like, hey, I have to make a certain amount before I work and help with money management. You start with the basics, your budget, your saving plan, your saving system, your automation. All those things can be super helpful for you, even if you are not making what you want to or what you will be in the future, because it sets up the habits of saving that are super crucial for when your income does rise. And so I say set up the basis, get over the fear of making a move, get over the fear and the anxiety of doing something. So a lot of people stay with that fear and anxiety, and it's not helpful for them as they try to level up their life, especially their personal finances. So you got to get rid of those things ASAP, ASAP. So those are some of the things we talked about. And we did do a laid off thing too. If people are laid off in this time, ways now about jobs. If you're laid off, there is a playbook that we posted on TikTok. I think the first thing, of course, you have to do, file for unemployment, secure your health insurance, excuse me. Pause spending for a little bit just to see where you're at. Roll over 401ks, those sort of things. So those are the super, super quick tips you could do ASAP, right? ASAP on when you've lost a job. It's super, super simple to do and implement ASAP. And then take your time, be patient, look at your severance and all those stuff and take your time to another job or not. Maybe you want to stay and really find and retool your career path. Those things are super, super possible to do. So make sure you do that. Well, folks, I want to do one question. One question. Let's see if we can find one to knock out here. We're going to do roundtable and question of the week. Let's see if we can find one. I don't know if there's anything interesting, but we do have one, and it's an interesting enough to me. How much, this is interesting, what is the average value of unused gift cards per person in America? That's so random, but so interesting. Average value. I'm a person that's going to use that gift card. So, are you a person that will not use your gift card? I love a gift card, man. I would say it's like $30, right? Not too crazy. Oh, the average unused amount is $244 per person. My wife would definitely not use a gift card. Would not care. I think she has gift cards. She's never. I love a gift card. How would you not? 244 per person. That's use your gift cards. All right, folks. Use your gift cards. You gotta make sure you also stay tapped in to our program, our show every week. We do this every week. Make sure you share it with your family and friends, and we'll talk to you next week.